In this video, traders, we're going to look at a quick checklist to run through before each trading day, specifically for Forex traders. Stay tuned. Hey traders, a warm welcome to you. Thank you for joining me. All right, so if you're trading Forex each day, whether you're day trading, whether you're taking position trades over multiple days, here's a quick checklist just to really get your process refined. Many people come into trading day kind of all over the place. Sometimes they do this, sometimes they do that. If you keep things short and simple to start off with, then you can take away things or you can build things and add them on as you see fit. So it's a good starting point to kind of make sure you're in line and you're focused and you're ready and prepared to make that first trade. All right, so number one is pair scan and selection. So you may be watching a global array of pairs across all the majors, the minors, etc. So what you want to do initially is you're going to scan and choose the ones you're trading. Now that may not change from day to day, I appreciate that. You may well be, okay, well I've got 3 or 4 here that I'm always looking at day to day, and maybe that shift only happens once a month perhaps, but it's still worth scanning and going, okay, is there opportunity elsewhere? Is something happening elsewhere that actually still I'm allowed to trade it? Now it might be an exotic pair, which of course you might not want to touch because it's not part of your trading plan, but you might spot something that's a little bit different, not something you normally look at, that's actually setting up quite nicely for you. And also, not only that, but it gives you an overall view of what's happening, where the money flow is going, where the strength is coming, where the weakness is coming, and it gets you to feel the market more. You know, if you're watching all your pairs, you're looking at all the majors, you're looking at some of the minors, looking at the best crosses, and then you go, okay, well, actually I can see some strength coming to dollar there, and you start to feel a little bit more where the money flow is going as opposed to just kind of looking at a raw chart. I find that helps quite a lot. And then you're going to scan them and select them, the ones that you want to focus on in the day. That might be just one, it might be 2, might well be more than 2, but obviously it's going to depend on the time frame you're trading, etc. I never recommend trading more than kind of 2 to 3 really. I know some traders can trade more than that, but that's kind of the sweet spot if you're intraday trading, I find. Volatility, so volatility, is it kind of in the range that you're looking for, i.e. not too much, not too little, something enough to get some meat out of it, but not so crazy that, you know, perhaps it's moving too quickly for you. The range, expected range of the market at the moment, you know, some pairs go through times where they're very, very slow, very quiet, nothing really to grab onto. And of course, price position, you know, is it in a breakout area? Are we at kind of 20-day lows, 52-week lows, middle of a range? Where are we? You know, just those kind of analysis to say, yeah, right, you know what, there's not really going to be any external money coming in. I'm not expecting big moves. I might leave that pair and just focus on this one. Second thing, guys, is to check any scheduled news items. Goes without saying, you want to manage the risk. Managing the risk is making sure you're not getting caught out by economic news. Loads and loads of free websites out there that offer this, apps, websites as well. You go on, just want to look and see anything coming out. So for the pair you're trading and also for the big economies. So always look out and see what's coming out from the US, even if you're not specifically trading a US dollar pair. So US is crucial, as is kind of some European data. So things like the interest rates, obviously non-farm payrolls, jobs numbers, stuff like that, but also focusing on your specific pair. So if you're trading yen, for example, you're obviously going to want to make sure that there's nothing coming out during the time you're trading over in Japan that could influence the yen, and obviously the other side of the pair as well. So just having a broad view of economic data, not necessarily, as I say, just for your pair, but also for the global economy as well, because that's still going to have a knock-on impact. If not as direct, it'll still have a knock-on impact to that currency pair, because everything, money flows all around, guys, as we know, in the currency world. All right, so any scheduled news items. Number 3 is check and review correlated markets. So if you're trading, for example, GBP, you might want to see what the FTSE's been doing. You might want to see how it's been behaving with the FTSE 100, FTSE 250. You know, you might want to just kind of see some of the interest rates, some of the bond markets relative to your currency pair. You might want to look at some of the commodities if you're trading a commodity currency. You know, this kind of thing, guys. There's always these correlated markets that sometimes are very, very correlated in sync, sometimes not so. But again, it gets you that feel, especially if you're trading the currencies, which are all about that money flowing around the world, so to speak, and where the money flowing in. It helps you see a little bit more. Like, well, actually, I'm seeing, you know, index strength and equity strength and currency weakness, right? It can make sense, this, that. And you start putting the pieces of the puzzle a bit easier together. So checking your correlated markets is always a good idea if you're trading FX. Number 4 is to mark off any key levels and conduct your TA. So you've probably got a routine for your technical analysis. This isn't really the pros and cons of indicators and this kind of stuff. You know, stick with what's working, you feel comfortable with. with for you. And if you want some ideas and stuff on, you know, things, then make sure to subscribe, because we'll talk about charts and techniques, etc. But the point is, just do your technical analysis on your charts that you've got. You've fine-tuned them, we've narrowed them down. You're just looking for your key levels, looking where your indicator levels are, your higher time frames, lower time frames, whatever process you've got, just run through that quickly. You don't have to spend ages on it, and then you need to spend hours and hours on each thing. You're looking at 1, 2, 3 markets, and just getting a feel for where prices and what price potentially could do. You know, that's, without going kind of too deep into that, that's really the key, guys, is to think about what price has done and where it could go, and then trying to position as it goes there. So number 5 is assess additional risk factors. So this may apply or may not, but it's always worth being aware of. Additional risk factors at the moment, for example, could be tweets coming out from Donald Trump with regard to is a trade war going on. The time I'm doing this video may well be different than the time you're watching it, but there's always something, there's an additional risk factor from somewhere. That could be a terrorist attack. We were going through phases years ago where there was, you know, it seemed like there was a lot of attacks, or at least a lot of news about, worried about attacks. You know, subways were suddenly closed down, and this, that, the other, and everyone was on edge on that. So there's always something like surprise news that might be a risk of moving the market you're trading. At the moment, like I say, it's Donald Trump tweeting specifically about trade wars, or other people tweeting about impeachment ideas and all this kind of stuff. Regardless of your thoughts on that, it's moving the market. There's more than likely something that's surprise news that's coming out that's moving the markets. And like I say, it changes year to year. There's always something coming out that has a potential to kind of just jolt the market. You know, if it's war news, if it's kind of terrorism, like I say, all these things just jolt the market a little bit. So being prepared at least, and having some kind of scanning process, it has to be crazy, but some kind of process. And that could be as simple as saying, right, I recognize there is additional risk factor coming from someone saying something on Twitter, or additional news coming through the wires from whatever. What am I going to do to manage that? Well, I'm always going to put an emergency stop of 80 pips in, 50 pips, whatever level you're at, so that I'm not caught in some catastrophe move like a deer in headlights, or, you know, when you've gone to you know, get a coffee or something from the kitchen, whatever it may be. You know, the point is, as long as you have that risk managed and you appreciate that, you can't really ever be caught out by it. Or you're at least minimizing the times when you'd be caught out by it. All right, guys, there's 5 quick things to do before the trading day. You can run through these relatively quickly. You have to spend ages on them. You can knock off ones that don't really work for you, add ones that do, and build a nice little solid system and strategy so that you've got the habit, you've got the routine. Every single day you're coming in front of the screen, just setting yourself up, bang, run through it all. You feel good, you feel prepared, you go off, you get your coffee, you come back, and you're waiting for the open or whatever time you actually start trading. All right, guys, take care. Bye-bye.